Welcome to my channel. Today's class is about the financial statements of a company. We are moving on to new chapter, financial statements of a company. The chapter relating to share capital, debentures and accounting ratios we have already taken and discussed. So first of all, what is meant by financial statements? Financial statements, as in the case of other firms, also for a company, the financial statements are the basic annual reports through which a company understands its financial situation, and it also provides information to the owners and various other external parties, such as external parties means those who are related to the company, not any common person. External parties which include investors, tax authorities, government, employees, etc. Then the financial statements comprises of balance sheet, also known as position statement. Why it's known as position statement? Because it shows the position of the company on a particular date, that is 31st December any year. As at the end of the accounting period, the statement of profit and loss of the company and the cash flow statement. Then, nature of financial statements. First nature is about recorded facts. Financial statements are prepared on the basis of the facts in the form of cost data recorded in the accounting books. That is, in the financial statements, we records informations that we get from either bill, journal or the ledger accounts. Then accounting conventions. Accounting conventions means the principles to be followed in accounting. So in the financial statements, certain principles, as we have already studied about the accounting conventions in the previous classes. These are principles to be followed while preparing financial statements. Then postulates. Financial statements are prepared on the basis of certain assumptions. Assumptions is known as postulates. Known as postulates such as going concern concept. Going concern means, as we have already discussed, going concern means it is a concept based on the assumption that the firm will move on for a very long period of time. Then fourth nature is about the personal judgments. Under more than one circumstance, facts and figures presented through the financial statements are based on the personal opinion. The depreciation is provided, taken into consideration the useful economic life of assets, provisions and doubtful debts are made on the estimates made. So these are the nature of the financial statements of a company. Then objectives of financial statements. Why do we prepare the financial statements? To provide economic information about the economic resources and obligation of business. Economic resources means how much we possess, how much amount we possess, how much we have cash in hand or cash at bank, and the obligations means the liabilities of the business. To provide information about the earning capacity of the business, how much profit that the firm has, that the company has earned. To provide information about the cash flows. Cash flows, how much cash we got and how much cash is spent. Cash flows include both inflows and outflows. Inflows means the cash that the amount of cash that the company got, and cash outflows means the amount that we spent on certain essentials. Then to judge the effectiveness of management. They supply information useful for judging the management's ability to use the resources of the business effectively. Resources of the business includes land, labor, and capital. So, the financial statement shows how or how efficiently and effectively the management has done its work by effectively utilizing the resources. Information about the activities of business affecting the society. A business firm is a part of the society. So this financial portion or the financial statements depicts the how the business firm affects the society. For example, we can say if it is producing any pollutants, or it is producing pollution to the society. So this type of information we gather from the financial statements. Then disclosing the accounting policies. These reports have to be provide the significant accounting policies, concepts followed in the process of accounting, and changes taking place to them from time to time. Then types of financial statements. The financial statements mainly comprises of two statements, that is balance sheet and the statement of profit and loss. Then this is given the format of balance sheet. Apart from other firms' balance sheet, the company's balance sheet, the format of company's balance sheet is like this. Heading, balance sheet as on 31st March the year. Then particulars, note number means if we have to note any numbers, any specific numbers to distinguish that particular transaction, like ledger folio or journal folio. Then figure as at the end of the current accounting period, figure at the end of the previous reporting period. So this comprises of two, or it is used for comparison of the previous period and the current period, this balance sheet. Then equities and liabilities, then shareholders funds, share capital, reserves and surplus, money received against share warrants, then share application money, pending allotment, then non-current liabilities, long-term borrowings, then deferred tax liabilities, long-term liabilities, other long-term liabilities, long-term provisions, current liabilities, short-term borrowings, trade payable, other current liabilities, short-term provisions. Then we have to total this. So this total includes the liabilities, equities and liabilities. Then the assets. It's prepared in the form of column. Then the assets, under the assets, non-current assets, fixed assets, tangible assets, intangible assets, capital, work in progress, intangible assets under development, non-current investments, deferred tax assets, long-term loans and advances, other non-current assets, then current assets, current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. Then total. Like this, we have to prepare the balance sheet. Then we have to discuss about the terms in the balance sheet. The first term is relating to the liability side. First item comes under this liability is shareholders fund. Shareholders fund comprises of share capital, reserves and surplus, and the money received against share warrants. Then share capital consists of preference capital and equity capital. As we have already discussed. Then reserves and surplus. Under this, first one comes under, this one is the capital reserve. It's the amount set for major long-term projects. Then capital redemption reserve. This is a non-distributable reserve that a company creates when it buys back its own shares. Then securities premium reserve, when there is a capital receipt that records the amount a company receives when it uses shares at a price higher than the face value. That is, securities premium reserve is a reserve created in certain reserves created by transferring certain difference amounts to it. Then revaluation reserve, it's a reserve created on revaluing or changes, reserve created when there is changes in the value of assets or liabilities. Then share options outstanding account, then it shows the difference between the market value and the issue price of shares that are guaranteed or granted to the employees. Then other reserves specifying the nature and purpose. Then surplus balance in the statement of profit and loss. Then money received against share warrants. It is the amount received by the company that are converted into shares at a specific date on a specific rate. Money received against share warrants to be disclosed as a separate line item under the shareholders fund. That is, money received against share warrants, it should be shown under a separate heading under shareholders funds. So we will discuss about the problem on it in the next class. That's all for today. Thank you.